Hey, it's Clay Trader, and this will be a video chart on the Dow Jones Industrial Average. Did this one last week. Been trying to do this one weekly, and the last time I did it, we were down in this range, and I was talking about how it was going to be important because the last time we were down by the 50-day, which is this purple line, we got a nice bounce, and basically all I said was, hopefully history repeats itself, and sure enough, it has. You can see the price got down here, hovered around its 50-day simple moving average, and has since taken off. I should note that it's 3:30 p.m. Eastern Time, so I still have 30 minutes left. So if you see this number change over here, you're not seeing anything. The market's still open, but I feel comfortable enough doing this because I don't think we're going to see anything drastic to the downside. I wouldn't be surprised if in this last half an hour it takes off again to the upside. That just seems like it's pretty much been the way it's gone today, where the bulls are very strong. So I just wanted to start it now and maybe even catch a stronger upwards move. Real quick, at the 5 minute, you can see that I have a little consolidation pattern going in here. So we'll see if we can get any sort of break to the upside of this. But overall, 5 minute chart, very nice. You can see this morning was very strong, and then we had the afternoon basically just go sideways. Then we had a move up here, and have since been going sideways from that. So maybe we'll get another one of these big moves here going into the last half an hour, but we'll wait and see. This chart's not going to be anything special. Just want to get a few things updated. The key thing being, and what I'm going to do is actually get rid of these lines. These are all from previous videos I did, but the big thing that happened today is just simply we put in new highs once again. Now, if you would have told me we'd put in new highs after the unemployment numbers on Friday, I would have probably called you crazy. But I guess this is a pretty crazy market. So here is our new support level that was formed today. This was our resistance because it was a previous high. However, since it was broken and it's looking like we're going to close well above it, it is now a support level. The other support level that I'm going to keep my eye on, besides the 50-day, this has proven to be a very important support level, but we also have this level here. I'm taking it from just looking at these highs of all the candles over here. You can see that we've had a bunch of highs here, then we had a high there, and then when it turned into support, we had it bounce from there. And this area here has got a lot of, kind of history with the price. So I'm going to use this as a support level too, and we'll just call this kind of the support zone. Hopefully, the 50-day will get up above here, which will just imply that the trend remains strong. But for the time being, these are going to be the two support levels that we need to focus on now. As long as these hold on any sort of pullbacks, the chart's going to remain bullish. As I had noted, we wanted to see how it reacted around the 50-day, and with the past few days' action, you can see that the bulls really do have a strong fortress here. They're really digging in, and whenever the bears try to push it through here, the past two times have been massive failures. This time resulted in a new high, and once again, this time the bears try to push has now resulted in a new high too. So it seems like whenever the bears try to push it down through this, the 50-day here just acts like a trampoline and bounces it forward. Now for resistance levels, what I'm going to do is switch to the weekly chart here. And one thing to note, this is Monday, so there's still 4 days that can affect this candle. So keep that in mind. This candle still has a lot of days before it can see what the final shape is. But that's the point of this right now, is just simply to figure out some resistance levels. And the next one I see is pretty much right up here. You can see that this was the low of this candle here, and then the high of this one back in September of 08. This level is at 10,315, we'll call it. So it's looking like we have another about 115 points that the market can head up before encountering this next resistance. And I don't really know how much of a resistance this one will be. It's just simply the low here. I think the key resistance that we're slowly approaching is right here, this orange line, which is the 200-week simple moving average. This could be a huge battle, but we'll still have to probably give it a few more months before we can come up there and give that a test, as this is right now above 11,000. So I don't want to get too far ahead of ourselves. But for the time being, we're looking at 10,315 right now is pretty much the next resistance level according to the chart. So that's going to wrap up the video. Like I said, nothing special. Just want to get this noted, and actually just glancing down, seeing we're getting a very nice bullish crossover on the MACD. You can see the last time we got the crossover here corresponded with right around that area, and we got some nice upwards movement. So that's one thing that is looking good. The other thing that I want to point out real quick is just simply this right here going on the MACD. What we have is a negative divergence, meaning that as the market's increasing, the MACD has this negative slope to it. Let me change it so you can see it better. And the thing we need to keep or watch is we want to see this MACD get above this line. If we can break above this line, that would break the negative divergence, and that's what we want to see. But right now, I'm still a little iffy on things because of this negative divergence. So yes, the market keeps going to new highs, but every time it goes to new highs, the MACD doesn't go quite as high. So that's what's giving us the negative divergence. So it's something to keep an eye on. And should you go and sell everything? No, but should you at least pay attention to it? Yes, you should. But like I said, if this yellow line is broken and the MACD can get up through it, that would rule out the negative divergence, since we would have broken above the line. So keep that in mind. But overall, good day. Hopefully this will be a start to a good week. If you do have any other questions, please shoot me a message. I'd also encourage you to check out bullmarketnewsletter.net. If you go there and sign up for the newsletter, you'll be sent a free ebook, which has been getting very good reviews. And with your subscription, you'll get chart setups, educational pieces, trade ideas, all sorts of things, from big boards down to penny stocks. We've been having some good success making money, so it's one of those things where you should check it out. No strings attached, it's all free, so you really have nothing to lose. One last time, this was the Dow Jones Industrial Average. Thanks for listening.